Hello, everyone. And after a long Labor Day weekend here in the US, we are back with the Forex technical market update for September 8th, 2015. I hope you all had a wonderful holiday in the States. And if you weren't in the States, I hope you had a wonderful weekend. Okay, so although the US was on holiday, the markets did continue. Life did continue elsewhere. And we're taking a look now at the Australian dollar versus the US dollar. Australian dollar has been on a fairly strong downtrend over the last four and a half months, but we're seeing the market recover somewhat in the 69.97 level on the Australian dollar. Now, the thing with the Australian dollar is that it has been tracking the gold market, and as we see gold decline, we see the Australian dollar decline. But gold has actually performed a little bit better because the Australian dollar keeps making new lows, while the gold market at least is ahead of this 1080 low that was made in July. Okay, and fundamentally, although we don't speak a lot about fundamentals on this show, fundamentally they say that the Australian dollar is tied loosely tied with the gold market, because when you have soft commodity demand or soft demand in gold, it affects the Australian dollar negatively, and that scenario seems to be playing out in the markets here now. And just because a scenario, that's a theory and it's playing out in this scenario, but always confirm it by what prices are doing, and in this case the prices are confirming with this pretty strong downtrend in the Australian dollar. Okay, taking a look at the euro has been a tough market to trade over the last couple of months, because ever since it made a new low in March, it has been consolidating, and we have had a number of breaks and false breaks in the euro. But take a look at March, April, May, June, July, August. So in terms of the last 6 months or so, the euro has not really done anything for trend traders. On a trend trader, the trend trader, if you are using the trend trader philosophy, and now just because the euro hasn't been doing anything versus US dollar, that doesn't mean the euro hasn't been moving against other currency pairs. And that's why when you're position trading and when you're swing trading, it's good to look at various different currency pairs and not just the euro alone. So we are in a triangular consolidation pattern. We see that we did break out to the upside, as you can see with this swing high, but the markets came all the way back down. Now, the scenario is this market could still head back to the upside and take out these highs, or we could see a collapse below this trend line, and the market could be going towards a 104 level. But this trend line is definitely key, and it will play an important part in determining what exactly this market is doing. Taking a look at the US dollar index, we see that this market made a double bottom. This was a bottom A. Market bounced off of this bottom and could be challenging this 98 level. So it could be argued that this market is in an upswing and is moving to the upside on the US dollar index, and we could see a corresponding down move in the euro. So that is a scenario that could be playing out. Taking a look at the Japanese yen is tracking the stock market. There are times when the correlation is not really that strong. No, it's fairly strong, because when the stock market it's up, the USD Japanese yen is up. When the stock market is down, the USD Japanese yen is down. So we see some recovery in the stock market this morning, and we also see a recovery in the USD Japanese yen. Key resistance is up above 22 or 122. You want to see the market close above this. This will be a W bottom. And if that happens, we could be on our way to the 124 level. If the market collapses further and takes out this 116 low, these lows here, that would be fairly bearish for the market, and we could collapse down below 116. Now, as I've been saying, we are up on the final third of this year, and the final third of this year normally has fairly good trends. So it is important that if you are plotting your Forex, what you want to do with the Forex markets, now is the time to act. And the time to act is not after the fact. Now is the time to act. If you want to get education, or if you want to join the signals, now is the time to get it started. Because looking back, when you look back a couple of months in December, January, you will say, oh, I missed this move or I missed that move. But you have to act in order to capture the move. Okay, so if you want some information about the signals, you can click on the link below this video. Now, we have been getting questions about educational material, and yes, we do provide some educational material here at Aces Trading, and the educational material is extremely good. But the main thing that we do here is the signals, and the Forex signals. And what we do is demonstrate to traders that you can, in fact, make money in the markets if you just stick with it. And the signals allow you to copy our trades directly into your trading account. So you can see exactly how a portfolio is managed in real time. Yes, there will be up times, and yes, there will be down times, but the overall trajectory over the next 12 months is that you should be making money with the signals. So click on the link below to get started, and I will see you again tomorrow. Thanks for listening.